Well, the number of best performers in the 2012 Socially Responsible Investment Index review fell to 10 this year, and that due to more demanding reporting requirements. 6 potential best performers have been precluded from the best performer category in the 2012 SRI index, and that due to the mining sector not being considered for best performer status after the recent labour unrest we've seen in the industry. Joining us now for more on this is Corli Le Roux. She's head of Socially Responsible Investment Index and Sustainability at the JSE. Thanks so much, Corli, for joining us this afternoon. Well, we've been speaking about socially responsible investing quite a bit on this show, and particularly how South Africa's been doing on the environmental front with the Carbon Disclosure Index, of course. How socially responsible is South Africa incorporated, generally speaking?
Well, actually, I think South African companies tend to do really well. It is true that on the environmental areas, the South African companies have lagged a little bit, but our experience in the SRI index has been that in the last number of years, they've really come up to meet the bars that we've been setting to them. In the social areas, a lot of our companies tend to outperform, but particularly given the strict requirements that we have in South Africa and the strong regulatory environment within which companies need to operate as a social license. So I really think that South African companies have a lot to be proud of when it comes to this area.
Does it encourage investment, Corli? You say in your report, which you kindly sent us this morning, the intention of the index is twofold. Number one, to encourage companies to operate responsibly and transparently, and to prompt institutions to consider ESG factors when evaluating investments. So it is twofold, isn't it? On the one hand, it's how companies should behave anyway, and on the other hand, institutions should consider the way companies behave when considering and evaluating their investment policy.
Absolutely. I think, the purpose of the index is to demonstrate and recognize the good performance that is happening, but it's also aimed at facilitating that debate, which is really becoming a more and more crucial debate. We haven't yet seen the investment institutions stepping up to the plate in these engagements as much as we would hope they would, except for people like the Government Employees Pension Fund, for example, who's partnering with us on this index. But they are starting to really see the impacts that environmental, social and governance issues can have on portfolio analysis. So we've seen in the last couple of years a big growth in awareness amongst the investment community about these issues, and certainly increase in the engagements that are happening.
You talk about the bar being raised on a criteria basis. I mean, what makes you a socially responsible company?
Well, essentially what we like to do is to try and push companies to continue to improve over time. Our engagements with the companies as well as the investors is a critical factor in doing this, trying to understand what it is that they need in order to be able to have a proper conversation. And so our focus over the last number of years has been very much around promoting increased transparency and disclosure. And I think what we're trying to say is that a company that is paying attention to the right issues in the right way and sharing sufficient information with their stakeholders about what they're doing is likely to be a proper investment for the longer term.
Corli, looking at the introduction, listening to the introduction and Alishia's comments about the mining companies in South Africa, it almost says that because of the recent labour unrest, the blame, if there is blame to be assigned, has been laid at the door of the mining companies themselves, and therefore they've been punished on an index basis. So you've made a call there by the looks of it.
It was a very difficult call to make, and I certainly don't think that we are trying to punish the companies in any way. We were very, very encouraged by the conversations we were able to have with companies. We engaged on an individual basis with a number of them, as well as with the Chamber of Mines, and they understand our position. They understand the need for this type of index to be sensitive to socio-political events, and given the gravity of this situation, it was something that we needed to take account of. We were encouraged by the steps that they are taking and by the things that they are doing. And given the history of the mining sector as being strong supporters and strong performance in the SRI index, we have decided not to exclude them completely from the index, but we did feel that given the fact that there still need to be a number of solutions that need to be developed, that it was most appropriate this year to exclude them from the best performer category.
When it comes down to the stats though, Corli, I mean, the mining sector accounts for 18% of the total number of companies in the index, and that followed by life insurance and retail both at 7%, and then banks at 7% as well. So it shows that the kind of stride they're making overall. To what extent is that influenced by the spotlight that's actually cast on a sector like the mining industry?
It definitely plays a role. I do think that the mining sector has been exposed, particularly to environmental and social challenges for a long time, and they have been required to really deal with these issues at grassroots level, perhaps more than others have had to. However, our experience is also that these companies tend to really demonstrate advanced thinking and innovation in terms of developing processes to deal with the challenges that they particularly face. We have seen a number of other sectors really come up to the fore as well, such as the financial sector, who have had to grapple with their environmental challenges initially. However, we're starting to see a good balance and a good spread of different sectors throughout the entire index, which is really encouraging to us to see.
When you look at an investor now, here's a theoretical situation. You've got a mining company that's suddenly discovered a fantastic deposit somewhere, and its promise from its prospectus is that they're going to increase their headline earnings per share or the revenue, or whatever measure you want to look at, by 50% each year for the next 5 years, but it's polluting the water table. How many investors are going to say, you know what, the fact is that they score so badly from a socially responsible index point of view, but on the other hand, how can I treat my shareholders or rather my investors badly by not being in this one? How far are we away from somebody saying, no, I will forego those future profits, those potential future profits, until they clean up their act?
I think we're getting closer, although it's probably still some way off, unfortunately. I do think where we're seeing the most development at the moment is in the discussions that are taking place. I think investors are increasingly understanding the materiality of these issues, and the more companies can be encouraged to be transparent around why they make certain decisions, and also, trusting their own gut to say, well, this may be a short-term loss, but it could be a long-term sustainability consideration. I think, that investors are open to having that conversation, and we should be able to encourage that conversation, and we're seeing that increasingly starting to happen.